Hello traders and welcome to another video review. Today is Monday 26th of the July 2021. Let's take a look at the Forex calendar first. What do we have today? Some data had been released already. Those data were from Japan. As you can see, the PMI manufacturing and PMI composite data were released. Composite was better than expected, just slightly better than expected, but it was then a month ago, and the PMI manufacturing data were worse than expected and worse than month ago. Bank of Japan Core Consumer Price Index is rising from 0% to 0.1%, just a slight jump in a core CPI. But the key data for today are the IFO data from Germany. As you can see, we got the business index, current assessment, and the expectations data. All of them are scheduled for release at 10 o'clock. More of that. More of the more of the new data are scheduled at 1 p.m. This is the MPC member Vergechte will give us speech. Of course, this is the guy from the member of the UK Council. And during the New York session, we have a new home sales data from the, of course, US scheduled for release 4 p.m. and that's everything for today, for Monday 26th of the July 2021 from the economic calendar. So let's take a look. I guess we should take a look, of course, on the Japanese yen, so the American dollar, Japanese yen, and then of course the euro dollar. So let's try US dollar, Japanese yen. What is going on here? So the recent high was made at the level of 111.67 pips on the beginning of the July. On the 2nd of the July, we got the bearish engulfing candlestick pattern made here. We have a breakout out of the channel. We have a test of the channel, and then confirmation of the breakout. New local low was made at the level of 109.08 pips on 19th of the July 2021. This technical support 109.21 has held perfectly, just as it was on the 7th of the June 2021. We have a slight bounce. As you can see, we are trying to bounce towards this highs here at the level of this highs here at the level of course 100 and let me just move this line around the level of 110.71. so those are the highs from the 14th of the July. So far, a kind of a nice bounce from the level of the 40 on the RSI. Not that big, however. It looks good, but it barely the momentum has barely jumped above the level of 50, which is the neutral level. So we definitely need a breakout above 110.73 towards, of course, this level of 110.79, which is the technical resistance right now. So it's going to be painted in red, of course. Let me just extend my channel around here, and we can see right now clearly that we are not jumping back towards the positive momentum territory as long as price stays below 110.73, 110.98. So it looks like we might even continue our move to the downside. This price action inside of this channel looks pretty much corrective. It looks like A, B, and C, connector X, A, B, and C, connector X, A, B, and C. So that's a complex corrective structure here, which means this move from 107.50 to the recent high at 111.67 is not impulsive in nature. This is a corrective advance inside of the corrective channel. But now we got the first kind of a looking bullish as well, sorry, looking impulsive drop down, so we can even put some kind of a Elliott wave pattern on this, right? So we have the A, we have the B, we have the C pattern here, but please remember this might be as well a corrective decline. So far we have 3 waves. This bounce, let's see if this bounce is bigger than the previous range in terms of a price. So this one is around 1%, and this recent one, it might be a little bit bigger, it's 1.3%. so they are not equal, right? So those bounces here are not equal, so this is a part of some sort of another cycle. So this is ABC, this might be X, the connector, the connecting wave, and then ABC to the downside if the level of 110.98 is not violated. So the situation is pretty much clear. We are still inside of the corrective decline. So that's about the US dollar to Japanese yen. Let's take a look at the euro dollar, because we have the IFO data from the Germany scheduled for release later on today. What has been going on in the recent days on the euro dollar? As you can see, we have declined almost 20% since the high at 25th of the May 2021. So this decline is kind of a important. So it's a over 4% decline. We are getting closer towards the lows of the wave C around 1.1703. The volatility is right now subdued. It's not that big anymore, and we can see here some sort of a kind of maybe diagonal, maybe ending diagonal or something like this. It looks even better here, somewhere here, right? But it's not certain yet. So please remember that if this is the ending diagonal, we might have a breakout out of this diagonal towards the north side, so towards the 1.1952, 1.1993, which are apparently 2 key technical resistance for bulls in the near term. Of course, we got some technical support around here. Now maybe we should move it towards the recent low around the level of 1.1752. Let it stay here. So 1.1703 is really close. It's only 50 pips, but as you can see, volatility is decreasing, volatility is subdued. We have a holiday season, markets are not that active, so we are waiting for some kind of a trigger to, of course, maybe increase the volatility and give us some sort of a breakout. Again, if this is the ending diagonal, then the breakout should be to the upside towards the, of course, recent technical resistances. Please notice that we have this rejection candle here around 1.1952. So this level is very important for the bulls and for the bears, of course, because any breakout above 1.1993 will definitely give us an opportunity towards the 1.21 and 1.22. Those are the next target levels for bulls. Right, the momentum, as you can see, is subdued. It's still below the level of 50, which is the neutral level, and technically speaking, the market is under the control of course, bears, right? Because the negative sentiment prevails, the negative negative emotions are still on the market. Market is ruled by the fear right now, and we are waiting for the breakout in the either direction. Let's take a look at the US dollar index as our last analysis. What is going on here? Our scenario with this, the black arrow posted on the 7th of the 8th of the July 2021 is suggesting the another subwave towards the level of 93.42. The high so far was 93.16, but generally our scenario is still of course active, and right now we got our technical support, the key technical support 92.52. This is the technical support made and tested on the 22nd of the July 2021. We are waiting for the test of the recent high made in the last day of March 2021, 93.42. It still looks bullish to me. Momentum, as you can see, is positive. It's kind of a strong because it's 62 points, so not that bad. Now we're out of this channel and we are still trading above the level of 92.50, the recent high 93.16. We can even put some kind of a, there you go, this short-term trend line, the blue short-term trend line, blue line. But as you can see, again, this starts to look as a ending diagonal. Again, we have the ending diagonal on the euro dollar. We might have ending diagonal on the US dollar index, or as some people call it, the wedge pattern. So this wedge pattern, if it hits 93.42 and there is no impulsive breakout way above this level towards 94.27, then of course the wedge will eventually will be resolved by the fall towards the 92.52, 92.32, and if these levels are broken, then of course we are going towards 91.41. And please remember, those technical supports are the key technical supports. And please remember that if we break to the downside, this might be very vicious, very sudden, very dynamic sell-off on the US dollar index if there is no breakout. And then of course the other reaction will be a massive move to the upside on the euro dollar, most of course likely. So this is my analysis for today. Thank you very much for watching, and I hope I see you guys tomorrow. Take care and bye bye.